Let's look at Coca-Cola. First off, read this disclaimer carefully, and do your good deed of the day by liking and subscribing. I have put Coca-Cola under a theme that I have called Dividend stocks. We can see that the dividend stocks have massively underperformed the S&P 500. So here you can see the stocks. These are classic dividend plays. Coca-Cola here, soft drinks category, compared to Pepsi, it's quite significant underperformance. But that can actually make them a bit interesting. Here is the company's website, their products, Coca-Cola, a bunch of flavors. Let's look at all products. The thing is that, the Coca-Cola company is way bigger than just Coke. So here I have shifted to the Coca-Cola company's website, and here are their brands. Sparkling soft drinks, Fanta, Sprite, Schweppes, Coca-Cola, water and hydration. So you got Powerade, Smart Water, Desanti, juices, dairy and plant-based. You got coffees, and you got teas. Hence, they do have a diversified portfolio. The gripe I have about Coca-Cola is that the company is named after one of its least healthy products. And that is a branding issue. Especially looking longer term into the future, where the unhealthy side of Coke is going to become a much bigger and more salient issue. Okay, so look here at the seasonality. KO is the ticker. So January, even if we look way back in time, January has always been the very weak month. And it gets, significantly stronger here heading into March, which is the strongest month. Hence, potentially, the weakness in January could actually be a very interesting entry opportunity for a bullish position. Because obviously, it's all about buying low and selling high. Let's now look at the charts. So this is all the history I get here. And you can see that we are talking about a pretty impressive, almost 8,000% gain. So that's pretty significant. Very significant indeed. Okay. So let's zoom in a bit. Here you can see the financial crisis. It did go down, hence it is certainly sensitive to bear markets. Here you can see a massive weakness as actually way before the dot-com bubble. Hence, there is certainly some discretionary aspects to Coca-Cola, even though it is categorized as a consumer staple. Okay, the reason why I think Coke is quite interesting. One thing at this point, you do have this horizontal line that is drawn. As you can see, we do have some support levels there. Another thing, if you look here at this red 200-week moving average, support, 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 support. Hence, it is a key buy level. Bulls show up around that moving average. We are very close now. It is possible that we will go down to test, but if you look back here you probably had a bunch of people waiting to buy here, but then the stock ran away. So that's one of the risks of waiting. But charting wise, we do have a very key support level. If you look here at the RSI, it draws this line here, and you can see that around here buyers tend to show up. The accumulation distribution is also quite healthy, so there is some interest here from buyers. Okay, let's look at the correlation first here. So you can see that there is a 57% positive correlation with S&P 500, hence it's not that strong. Which means that if we do get, more of a correction in the market, we could have some divergence. Currently, the correlation is very strong, 85%, but historically, as we have seen over longer periods, there can be a much weaker correlation. And also, Coca-Cola having underperformed the market could be a benefit to Coke going forward because, mutual funds and, the big players, they will rotate out of the very overbought securities into those who have underperformed. And Coca-Cola is one of those classic, safe stocks to buy. And it also, of course, is super liquid. Here you have support here from the 200-day moving average in red, another support level. You see that these horizontal levels are touching, that key support level back here. So you have that as well. Accumulation distribution is showing that on the dailies here, we are seeing sellers still in control, but it seems to be smoothing out a bit, the battle. So there's more equilibrium here between buyers and sellers. Looking at the RSI, we are at a low level, 31. Historically, buyers tend to show up. So charting wise, this is interesting. Okay, so let's explore further. Here you get Finviz. They like to draw these automatic trend lines. We do have a break of a trend line. That is an issue. A bit more bearish. You can see the performance mediocre. If we look here at the analyst price targets, they suggest a 17% upside. That's bullish. Saks.com, number 3 hold, C value, that's good-ish, D growth, A momentum, a VGM of C. The industry rank is in the bottom 27%, that's obviously not that good, but the dividend is really good, 3.37%, that's pretty darn juicy. Okay, and if you look here at the forward PE is 23 here for Coke. If we look at the Dynamic Food and Beverage ETF, that is 18, and the dividend for that ETF is 1.10%. So definitively Coke wins here on the dividend side. Okay, so to sum up my take here on Coke, I think that, the theme, dividend stocks, we definitively see underperformance, but as I said, given that one of the key principles, in the market that, is most successful, is all about buying low and selling high. Hence, there's a very real probability that the underperformers are going to see some increased interest from buyers, because there's a lot of other themes that are definitively not underappreciated. If we go here to the megatrends, we can see just extreme outperformance, 370-ish% outperformance vis-a-vis the S&P 500, and you have, themes like blockchain, which is outperforming by 2,900-ish%. I mean, these are, of course, very strong bullish moves that we do expect from the megatrends, but you can make them a very strong case that a lot of different sectors, subsectors, industries, themes are overextended at this point. Hence, I think that it's time to look more for those spaces that have not really seen that participation. And Coke, it's one of those safe stocks that you can easily see, the mutual funds and other kinds of managers look at and take a position on. Given the extreme liquidity of the Coke stock, it also means that you can get into all kinds of option strategies. But yeah, looking at the long term, I'm a bit more lukewarm on Coke, given that it is very sensitive to bear markets. But looking at the coming months, I certainly feel more bullish than bearish.